The National Investor's motto is, you can get information anywhere, but here you get knowledge. And for well over 40 years now, Chris Temple has imparted that knowledge, an unparalleled, understandable, and useful take on the big picture of the markets and of our world. He has been out in front of what you see on the news every day on many themes. More, Chris has taken this macro knowledge and his unique analytical abilities to uncover unique investment opportunities. Often he has guided his members to big winners in resources, biotech stocks, and more. His talents and connections often getting him into ground floor opportunities before they are discovered. Without further ado, here is Chris with today's topic.
Welcome back, everybody. I want to give you an update today on some news that came out right after Labor Day and then was augmented just this last week from Amex Exploration. Amex Exploration, as you see here, is listed on the Toronto Venture Exchange under the symbol AMX. Here in the US, it's AMXEF. And Victor Cantore, my old friend of many years, who is the president and CEO, will join me in just a second to recap that news, which frankly is further vindication of what he and I discussed just about a year ago when the company came out with the first mineral resource estimate that the markets didn't really appreciate at the time. The stock sold off, as you see here via this chart, bounced a little bit, came down with the sector of juniors when we had the overall stock market correction back in the spring. But since then, it's been almost straight up as people have started to wake up to the fact that the Perron Project not only has still got massive exploration upside, which ultimately will, I think, lead us to that multi-million ounce gold resource that we all believe is eventually going to be discovered there, but more so in the near term and vindicating what Victor held way back a year ago when they came out with the first MRE. We have a project that is extremely economic and has a path, and this is the key, has a path to producing gold starting in just the next couple of years. Not a lot of companies can say that right now in the exploration phase. So they're transitioning to development. That's a big part of the reason why they're starting to be noticed a lot more. Now, before Victor comes on, a couple of the usual preliminaries. He and or myself are quite likely to be making what are construed as forward-looking statements. So be mindful of that. And secondly, a while back, Amex hired National Investor Publishing to do some follow-on media work, copywriting, things like that, of which this video is a part. Amex Exploration has been one of my recommendations for quite a while at the National Investor based on its merits, but a lot of companies do have us give them this added platform from time to time, and I'm happy that Victor's done that, and of course grateful because I think we're all going to benefit in the end, as we've seen in the recent past. Now, as you'll be hearing further from him, and I'll put up a couple of the pertinent details right now that you can take a peek at, this latest preliminary economic assessment, as it's called, has got just some astounding numbers, even still using $2,500 an ounce US for the gold price that they base it on. And of course, we're almost half again above that right now at rounding it off $3,700 an ounce US. But at $2,500, you've got an incredible internal rate of return of 70%. That's extremely high, much higher than the average project. And the net present value, and again, at a gold price well below the current market, is about 1.1 billion Canadian, which is a bit more than triple the company's market cap, even after this rally it's had since the spring. So I'm going to ask Victor to give us some of the highlights, a few anecdotes about what they're doing and why. For those of you that are more geologically and technically inclined, even beyond what we talk about in the next few minutes, one of the links I will have, you'll see with this video, will be Amex's own webinar that they held, the recording of that back on 4th or 5th of September, I think it was, where they were joined by Aaron Stone. Victor was joined, I should say, by Aaron Stone, who's the company's VP of Exploration, and by their main mine manager, Jonathan Gagne. And they talk about a lot of the more technical aspects of this, as well as going toward a bulk sample, which we just got that news out this week, that permit is in. Victor will explain more about that. And then ultimately they'll monetize this bulk sample potentially within maybe even inside of 2 years or so if all goes well, and then start what they call phase one of a two-phase project the following year by sometime possibly early 2028. And back with me again is the man of the hour, Victor Cantore, the president and CEO of Amex Exploration. Victor, good to see you.
Well, great to see you. Thank you for having me back on here. It's really love these conversations we have.
Well, the last time you and I visited, as I said before you came on, was back in May, and that was after you had come out with an updated mineral resource estimate, and that was one big instance of you, maybe it's not the best word to say getting even with some of the detractors in the company about a year ago. But the initial mineral resource estimate was disappointing to some people. There was never any question in your mind or mine that that was going to be augmented. And it's going to be augmented again in the future. And so
Absolutely.
when in May, when you came out with that new mineral resource estimate, people started getting a little bit more serious. That was around that helped to accelerate your share price off the bottom. But what you just came out with, which we're going to focus on in this quick update, is an updated preliminary economic assessment too, based on that initial resource estimate. And it really does fit a theme that you and I have talked about. I've discussed it separately to the extent that we've seen finally more and more interest from generalist investors and institutions into the gold space. It's hard to ignore this rip-roaring bull market we've had in gold, and now people are starting to come back. But it's still not a rising tide lifts all boats, even now. You've got to show that you've got good, sound economics, a game plan to production, and you really laid that out nicely in this last PEA.
Yeah, absolutely. I mean, we put out the PA and we phased it. So we said we have a phase one and a phase two. But what's really important, like the key in all this, is the press release that we put out about the bulk sample,
Right.
because that really allows you to get into production a lot faster. So we did put out, this is basically on page 22 of our PowerPoint presentation that we have online. We did our PA update, and we've spelled out the business plan the way it's going to go, where we just sent in our application for our bulk sample. It'll take about 15 months of construction, and we'll get into the ore of 2020, into the ore in 2027. We'll be shipping it out. Now I know it will be a significant amount of money in Quebec. The permits is going to be somewhere between, well, we applied for 40,000 tons. It'll be somewhere between 15 and 40,000 tons, the number that we will end up getting, because minimum is 15,000 tons. You have to give all the scientific reasons for this bulk sample for the size. And that's what we've done. We're pretty confident that we'll get our 40,000 tons. Now we're going to be around the 230-meter level. There's pretty high grade material there, and we'll also going into the Denise zone also. So we're expecting to be producing a slightly over half an ounce material there. So basically, if
Wow.
you have 40,000 tons, we're going to be producing 21,000 ounces. If we have 20,000, we'll be able to produce a little over 10,000 ounces. Now, given the price of gold in Canadian dollars, Canadian dollar is trading at a little over $5,000 an ounce. You do the math, and we're talking about $100 million if we get our 40,000 tons, or $50 million if we get 20,000 tons. So it's quite good. Now, at the same time, the way we're moving forward, we got multiple things going on at the same time. We want to get this into production as fast as possible.
Yeah.
So at the same time, we're going to be applying what we call the phase one. We're going to be doing a feasibility study in the phase one, and that'll take about 6 months or so. We've already started, like all the long lead items have already started. We do expect that feasibility study to be ready sometime in 2026. And the reason you can get this feasibility study done fast is because you're not dealing with open pits, you're not dealing with your own mill, you're
Right.
not dealing with the tailings management facility that's going off to another, that's going off to somewhere else. And that's going to allow us to start all our environmental impact studies, authorization, BAP. Now, we've taken the longest time that we feel it should take. It should take no longer than 2028, middle of 2028. Hopefully, it'll be a lot earlier. But what's really nice about this, normally you get permitted and then you start construction. But now, because we're doing the bulk sample and we're doing the ramp, the portal, the decline is all going to be production size. It's in the study. It's not far from 5 meters from 5 meters. So when you actually get permitted, you're already inside, so you can start production immediately. And this is not a small amount of production either. We're looking at averaging 112,000 ounces per year over a 10-year period. And the first 4 years toll milling, it's still 102,000 ounces a year.
Now, do
Uh,
you have, let me ask you this, Victor,
yeah.
for both the bulk sample, which is a precursor, I mean, this is kind of maybe it's a hokey term called a test drive.
It's exactly what it is. It's
Yeah,
test mining. That's the
yeah.
other terminology we could say is test mining.
So this is going to prove up the grade. It's going to prove up the metallurgy, how much you recover and all that kind of stuff. Do you
That's
already
correct.
have a specific mill in mind?
I'll tell you my preference. My
Okay,
preference is if we go north, there's the Casa Berardi mill there.
right.
It's slated to slow down substantially in between that period, between 2028 and 2032. What's nice about that is that it's 88 kilometers away. It's 50 kilometers on a fully paved road and 38 kilometers on a hard-packed gravel road. And you're basically in forestry roads. You're going through one small town. So when you look at your permitting for your bulk sample and you look at the permitting for when you're going to be sending out your material between 2028 and 2032, there's really not much of a difference other than the amount of trucks you're going to have on the road. So to simplify things, I prefer going that way because I'll be mostly on forestry roads, not disturbing any towns or villages. One small town that we would be going through. So and when we do the feasibility study, which it will be out sometime in early 2026, we need to have an LOI in there. So we will
Right.
have a deal done with one of the mills. I know it's a question that comes up often,
Sure.
but they're not the only one. There's the Redstone Mill
Yep.
owned on the Ontario side. There's the Redstone Mill owned by Northern Sun Mining. There's the Holt Holloway complex, which is in care and maintenance. They would love to receive 1,000 or 1,200 tons a day. Down south you have the Westwood. If we had to send it over to Lamac, our partner at El Dorado, then we
You
can
do
do that
that.
also.
Yeah. So you've got no shortage of options. You just have to flush out the best one. But as you just said, that will be decided by the time you put out the PFS early next year.
Absolutely. It's
Okay.
actually not going to be a PFS. It's actually going to be a feasibility
For
study.
full
We're going
feasibility
straight.
study. I'm sorry.
Yeah, yeah, we're going straight into that. The variation between the PA and the feasibility should not be much.
Oh, right.
We've taken steps to make sure that it's not a feasibility, but we've taken steps that getting prices and all that is that it'll be pretty close to the feasibility.
That's great. Well, look, as I said before you came on, you guys did your own in-house webinar right after you came out with the PEA. I've got a link to that with the notes to this video. You guys get into a lot more of the technical detail and so forth. So I don't want to do that. I want to segue though, Victor, into two things right now that are more the big picture and how you're seeing the market respond to you and why they're doing that. Now, first of all, the numbers speak for themselves. I mean, you've got a 70% internal rate of return on this project, 1.1 billion nearly Canadian net present value, more than triple your current market cap, even after the big move you've had. I mean, these are solid numbers, and a biggie, the all-in sustaining costs aren't much over $1,000 an ounce in either phase one or phase two. And that's when you still, I got to chuckle at this. That's when you still use $2,500 US gold. We're half again, almost higher than that right now.
That's right. That's right. Those are all the numbers at the base case at 2,500.
Yeah.
And I just want to add, like even again, this is like page 21 of our PowerPoint. So if you go over on the table that we have on the right side, even at $2,000 gold, the payback period is 2 years. Post-tax IRR is 47%
That's
at
still a big number.
$2,000 gold. It's still
Yeah.
passive, and it's a fantastic project, keeping it that. But when we look at, we use 3,400 for the study, we use $3,400 for spot. I mean, the numbers are spectacular. Like,
Oh,
look at the pre-tax total free cash flow. You're looking at $5 billion, like with the B. The payback period, which is actually a real good item to, to qualify risk. And
right.
the pre-tax is zero point 0.2, and you say, well, how about post-tax? Well, it's zero point 0.4. That's 5 months, 5.5 months. Like, it's as you're pouring gold, and it's really the staged approach that helped that, because where a lot of the upfront money is not there. It got pushed into phase two, but again, it's at that point in phase two, it's growth capital, because you don't have to go out and look for the money.
Right.
You're going to be paying it with your free cash flow, and there's plenty of free cash flow to cover those amounts. It's
Well,
so
and you
again.
said you said last year that this is where you were going. When you came
Yep.
out with the first mineral resource estimate, then the update in the spring, you said, you've got all kinds of exploration upside for years to come, especially now having substantially enlarged your holdings a short time ago. That's not the issue. The issue is you want to demonstrate that we can have a near-term mining operation and make a lot of money. And that's what you're
Absolutely.
demonstrating. And that's what
Absolutely.
the market wants to see.
Oh, absolutely. Look, as a share, like, I'm a shareholder and I'm an investor in many companies. And in this case, it's the same thing. I say, look, you have an economic deposit, show me. You can
Mhm.
build it with low numbers, show me. And
Yeah.
that's what we're trying to do. We're gonna, and for investors also, like, you know, here at speculation, like, is there more ounces and I'm saying this just really because I have to give always the waiver. I do believe that there's a lot more ounces there. Like, you could just imagine whatever number you would like. I can't put a number out, but yes, there is, and there's going to be a lot more exploration that's going to be going on. But with these ounces, I can put this into production and look at the profitability.
Yeah.
Why wouldn't I put this thing into production? A really small
Yeah.
capex that I can put this into production.
And at the end of the day, that's what people want to see, and especially institutions that are coming back into the space, the more sophisticated investors finally waking up that they don't want to let this gold bull market get any further ahead of them. And still in all, even as I said with your own share price recently, it's more than tripled off its low, and yet it's still awful damn cheap compared to the numbers you came out at $2,500 gold. I mean, it doesn't take a rocket scientist to figure this out. So on that subject, Victor, before I let you go, you were just both at the Beaver Creek Conference in Colorado and the Denver Gold Show. I had regrettably had to pull the plug on my attending, which I had planned to do at the last minute because I'm up to my eyeballs with our Better in Our Backyard conference here in the U.S. and the Twin Cities coming up in not very many days. I've got a lot of work to do with that, so I couldn't make it. But I've heard from a couple other people. I want to get your take on the tone of those conferences and the extent to which you're seeing people that are starting to get a lot more serious over this gold bull market.
Oh, absolutely. I was at both Beaver Creek and the Denver Gold Forum. Beaver Creek, I'll call it my dance card. I had no available spots for any more meetings. We were actually taking meetings off the meeting schedule. Like, there was no time slots, like, basically including the all our lunch spots, all our breakfast spots were all taken. And that's not just me. Like, that's everybody. It was really, really busy. The tone was really good. A lot of people were happy. What I realized at the Denver Gold Forum was a lot of generalists have come back to the market, and they're interested in precious metals. And again, this is one of the projects that really look good, because you're not out there trying to raise over $1 billion to put this into
Right.
production. So
You've
yeah,
got
it was
got
really,
an
it was really
existing
good.
resource, you got killer economics, and it's all about show me the money. And these people that are returning, that's what they want to see. You can have all the gaudy drill holes you want, but at the end of the day, you turn it into cash flow and profits, and that's what people want.
Absolutely. And on the exploration side, I mean, where all the gold is, it's basically on the Quebec side right now. That's where the study was done.
Right.
We had 45.6 square kilometers. And we purchased another 152. So now we have a playground of 197 square kilometers, all on the Greenstone Belt. And there's been that whole area. When you look at the Abitibi Greenstone Belt, the Shakopee Deformation Zone is where we're on. That's really been an underexplored belt, and we control quite a bit of it. And we're still looking for other opportunities to continue increasing it because we do believe that we can substantially increase the ounces here.
Nice. Oh, there's no question that you've got that upside. We're going to be talking about this for years to come. Well, congratulations on those killer numbers that you put out early in the month, Victor. It's great. I'm glad again to see some renewed vindication for you in the marketplace, but I think that the better days are still ahead, and I look forward to keeping up with you on that.
Great. I'll be looking forward to it.
All right. Take care. Thanks, Victor, for your time.
Thank you. Thank you.
For much more of the National Investor's cutting-edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com. And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time.